Now, Korea's economic report card for 2016 is out. Asia's fourth largest economy expanded 2.7% last year, logging a slightly slower pace of growth than the government had been hoping for. Shin Se-min reports from the Bank of Korea.
Dragged down by slowing demand, the Korean economy grew 2.7% last year, falling short of the government's 2.8% target. Korea's central bank says the local economy has now logged sub-1% growth for the past 5 quarters. The Bank of Korea attributes the slowdown to an overall decline in domestic spending amid sluggish global demand.
Private consumption is the main driver of Korea's economic growth at almost 50%. There was a significant increase in facility investment, but slowing domestic demand from a 0.5% rise in the third quarter to 0.2% in the fourth affected the overall growth rate.
Measures to revitalize the economy were in place throughout the entirety of last year. The government rolled out its expansionary fiscal policy in late 2016, implementing a $9.7 billion budget supplement. The government also held a nationwide sales event in October aimed at stimulating private spending. It was relatively successful, boosting retail sales by 6.5% on year in November. Korea's central bank played its part in attempting to fire up recovery momentum by leaving its key rate unchanged at a record low of 1.25% for months on end after cutting it by a quarter percentage point in June. Still, there are uncertainties over Korea's growth potential for 2017. President Trump's protectionist economic policies and the continuing political turmoil in Korea could weigh heavily on local spending. In response, Korea's finance minister has unveiled plans to stabilize people's livelihoods by front-loading more than 30% of the government's 2017 budget, some $72 billion in the first quarter. Shin Se-min, Arirang News.